Hello, traders. Gary Wagner with the gold forecast. It is September 13th. This is Monday, and this is the daily report. Gold currently trading slightly lower, 1244.89. Call it 1244, 1245 in the Forex gold. We'll take a look at COMEX gold in a second. We are looking at an interesting pattern. We are looking at the possibility of another doji, in other words, a small trading session right in here. We'll talk about that and what we're looking for towards this week, all here on the daily report. Traders, it is an interesting day. And then what we're seeing, we do have a higher low right in here, but we do have this doji candle. We are kind of getting a mixed bag today. In other words, we've got not conflicting, but we've got opposite information, data coming out, which is kind of giving the gold market a push-pull effect. The U.S. dollar was very much lower this morning. It was sharply lower in trading. But stock indexes, on the other hand, as well as higher commodity market prices, were firmer. So that what we had is gold, of course, is that safe haven investment. However, you're going to get what I call the water theory. In other words, liquidity is going to run to wherever it believes it can get the best return. And so with the stock market running, and you did have the global markets also firm, you've got that kind of a push-pull effect where the dollar is bullish, the stock market itself is bearish on the market in terms of gold. Now, we did test this one area, and that is the 1236. I still personally believe that the market will probably come and test this 1222. That's what I would look for a conclusion of this wave. However, I could be absolutely wrong. The market could firm up just as we've seen in many occasions, such as right in here, where we have this triple kind of small-bodied candle effect, and then the market kind of takes off again. Right in here you get it, and in here. In other words, it's more of a point in which the market is breathing. However, the other thing that we do want to look at in terms of chart patterns is this top of wave 5, in which we did have 2 days, both here and here, of small body candles, doji-like candles, and then the market came down solidly the following day. Now, is history again going to repeat itself? Well, we do have this double dojis, so we do want to watch out and see what happens in the market tomorrow. Now, we did have some interesting activity. We had a conference that went on over the weekend, and this was the Kitco's Metal e-conference. It happened on Sunday, and this is from Kitco News. During a question and answer period, the Congressman Ron Paul was asked where he thought gold was headed. His answer was, well, it depends on how you expect the dollar to go. Most likely the Federal Reserve will eventually stop the dollar from sinking and saving it. But if they keep doing what they're doing, it's virtually impossible to predict where gold is headed. Under today's circumstance, I think gold will continue to go up in the thousands of dollars in my best estimation. And this is according to Ron Paul. I thought it was quite interesting. He went on to say that he said that the central bankers watch gold carefully and might be keeping prices lower. They know that high gold prices are a vote against the job they are doing, and they believe they are very much in the business of making sure gold prices are lower. They kept gold under $35 for a long time, and then they had to throw in the towel. And of course, he's referring to the 1974 period when Richard Nixon actually took us off the gold standard, and he did that by allowing citizens to buy gold, and that's when the price changed from $35 and started this upward climb. Now, the other thing that I want to watch very carefully is exactly how the candle forms in our weekly chart. As we talked about over the weekend, we did get for the first time this doji candle here for last week's trading activity. That's this candle I'm circling right now. Now, of course, it is Monday, so this candle is just beginning to form. but it's forming, of course, as a small doji. I don't expect it to stay that way, but my sentiment is this. If we see this candle, as I said, begin to trade lower, it's going to form that three-river evening star. And traders, where's the last time we saw that? That was here. That was our record top. That was the historical high at 1265. Do I think that there's some credence there? It's absolutely something we need to pay attention to. As I said, we have got a cornucopia of data coming out this week that's going to be an inflationary measure for the U.S. And depending on how that data comes out and how that raw data is interpreted, I think that it will be significant in that it will give us the direction that we're looking at and where gold will head short term. Long term, traders, those of you who have been with me, you know my feelings. I'm looking for 13 and a quarter next couple of months. Long term, I'm looking for much higher prices. So that what we want to do is see how this market trades through the week and pay very, very close attention to this candle as it begins to form. Now, one of the last things that I want to look at is the silver market. This is December silver here, currently trading at $19.97, call it $20 an ounce. And to tell you what I'm looking at, I think that there's going to be some really good potential in the silver market, but I think we have to see a couple of things happen. First of all, you have a couple of gaps here and here. And you do have right now these candlesticks that are very much shooting star-like. So I think that what we're going to see is the market probably come and fill the gaps. First of all, you have this upper top that it's just broken. It is currently trading above it. So that's where our support area is going to be. And as I said, I do believe that we're going to have to probably come and fill these gaps here and this smaller gap here. And that's quite a ways down. So I think that there's some significant opportunity here, but we want to see how that plays out. It's something that we will be looking at over the next week or so. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you tomorrow on Tuesday for the next daily report. Bye-bye.